Bitcoin's $90K battle. The yearly close that could decide 2026. Time is running out. In just a few hours, Bitcoin will close its final candle of 2025, and the single moment may decide how 2026 begins. Bitcoin is hovering near $90,000, but it is not stable. The market feels tense. A green yearly close could restore confidence after the halving, while a red close, something never seen in a post-halving year, could shake the entire market. Traders are nervous. Large investors are quiet. Retail traders are staring at their screens, waiting. Yesterday gave a clear warning. Bitcoin briefly touched $90,000 for about 10 minutes. Analyst Cryptnuevo warned that $27 billion in Bitcoin options expired last Friday, a setup that often leads to extreme volatility. This is not healthy liquidity. It is a pressure building. Bitcoin is now stuck around $87,397, pulled upward by $90,000 and dragged downward toward the danger zone below $80,000. This is not just another small pullback. Every attempt to reclaim $90,000 has failed for the same reason. The 20-day moving average near 89,420 keeps rejecting price. Each rejection creates more selling pressure. Michael van de Papa warned that if Bitcoin cannot hold above this level, selling can accelerate quickly. At the same time, leverage is increasing fast. In just 1 week, $450 million in new leveraged positions entered the market. Open interest is rising while spot buying is falling. This means that traders are borrowing money instead of buying real Bitcoin. CryptoQuant data confirms this imbalance. Futures open interest jumped from 35B to 38B, while spot volume dropped sharply. Liquidation data shows heavy long positions stacked between $85,000 and $80,000. If price falls into this range, more than $1.2 billion in long positions could be liquidated in a short time. That would not be a normal correction. It would be forced selling. While Bitcoin struggles, traditional safe assets are rising. Silver has gained roughly 175% in 2025, and gold is near all-time highs. This signals a risk-off environment, even as Bitcoin is often called digital gold. Away from social media, large investors are positioning quietly. On Bitfinex, whale-long positions are now at their highest level in 2 years. Multiple analysts have confirmed this. Whales do not trade emotionally. When they accumulate slowly, it usually means long-term conviction. On-chain data shows low volatility spot buying, meaning large investors are buying without pushing price higher. These are long-term positions. Meanwhile, short-term holders are panic selling. Glassnode reports around $300 million per day in realized losses. Retail traders are selling at a loss, while large players absorb those coins. Long-term holders have also started accumulating again for the first time since July 2025. One major entity alone bought 1,129 BTC in the last 24 hours. Historically, when long-term holders switch from selling to buying, price eventually follows. Technically, Bitcoin has been compressing inside a symmetrical triangle on the weekly chart for nearly 2 months. This pattern shows pressure building. When price breaks, the move is usually strong. All major moving averages are currently sloping downward, meaning downside risk still exists. If Bitcoin breaks below $82,000, selling could accelerate toward $80,000. Bitcoin peaked near $126,200 in October 2025 and has since dropped about 40%. Some believe this means the cycle is broken. On-chain data suggests otherwise. Forced selling is far lower than in 2021. Leverage has been reduced. Long-term holders remain strong. In past bull markets, Bitcoin has experienced similar corrections before continuing higher. Now, there are only 2 paths forward. If Bitcoin holds above $87,000 and closes the year green, confidence can return quickly. ETF inflows may rise, and Bitcoin could move toward $95,000 to $100,000 early in January. If Bitcoin loses $87,000 and breaks below $80,000, liquidation cascades could follow, and fear may dominate early 2026, possibly dragging price toward $60,000. As Bitcoin approaches major levels, regulation will increase volatility. Margin requirements may rise. Position limits could tighten. Political pressure may grow. These actions do not destroy Bitcoin. They increase short-term instability while long-term fundamentals remain unchanged. If Bitcoin reaches $100,000, the most important decision is not whether to sell, but what to exchange it for. Thinking in dollars misses the point. The real goal is purchasing power. Long-term investors focus on swapping Bitcoin into assets that preserve or generate value, not short-term cash. The yearly candle close is the turning point. Large investors understand this. Institutions understand this. The noise will grow louder, but clarity comes from patience. Stay calm. Protect your capital. Ignore emotional reactions. The next major move is approaching, and this moment decides who is positioned for it.